So there is gold. There is it gold? Yeah, there is gold in the daily time frame. So we are going to talk about gold first. So in gold in the daily time frame, price was in a bearish move previously before giving us an up move currently. So looking at it, we can identify our high here. We have our low before price taking this particular high. Before price take this particular high, will give us a change of character to an upside. When price take that particular high, it indicates a change of character, which means that price will be changing from the up move to a down move. So looking at it, when price starts to move to an upside, price didn't take any inducement yet. So it creates this particular low and still pushed on upside without taking any inducement. So that means that we are still expecting price to move to an upside. So before price creates this leg, this particular inducement, and then take that inducement off, we also have another leg here, which also acts as an inducement, which our value pullback in this at this level. So hence, if price take off the inducement, then our high here is confirmed. So our high here is confirmed as our valid high. So price has taken here as an inducement, tap into an obvious level before we get this pushed on upside. So looking at this, I map the inducement here. I'll be naming it IDM. So anytime you see IDM, I'll not explain again. If you see IDM, that means an inducement. So take note. All right. So there is our inducement here. Price has taken it. And if price takes our inducement to a downside, it confirms this high. And before the high too was being taken. So if the high takes, now it confirms our low here. So now in future, there is a high time frame, which is a daily time frame. So we'll be looking forward to see how in future how price will react. So when price is moving to an upside, now price didn't take any inducement, went moving, price didn't take any inducement. First, we're having, this was our inducement leg. There is our inducement leg before price give this leg to us all. But this leg is not yet confirmed as an inducement. It will be confirmed as an inducement if price push above this particular high. So if price push above this particular high, then we'll be having our inducement, our current inducement leg here. But now there is our inducement leg here. So we'll be looking forward to see price give us a deep push, tap into a zone, this particular play, mitigate our unmitigated order block before price can shoot towards an upside. Maybe I respect the daily highest point, this particular level. So in the daily time frame, this is how we'll be looking on gold in the future movement. So as I said, if price breaks here too, then we'll now take here to be our inducement. So if here be our inducement, we'll now be anticipating price to come and take this particular inducement zone here and tap into an extreme order block here. That is our unmitigated order block, or tap into our unmitigated wick here before pushing to an upside. Okay, so currently there is our order, there is our inducement. That is our currently that is our inducement. So price will only confirm a new inducement, or this particular leg to be an inducement, if price breaks this high. So in the daily time frame of gold, that is how we are looking to see the movement on gold in the daily time frame. So now let's move into a 4H time frame to see how price will react in the 4H time frame. Before 4H, we'll move forward to check on our 15-minute time frame too as well. So in the 4H time frame, we said price is fractal. So hence, if price is fractal, it clearly tells us that how price reacts in the daily time frame is not going to be the same in the lower time frame. All right. So a minute. So in the 4H time frame, we have this particular high here is now our external high in the 4H time frame. Then have this low, which is also our external low in the 4H time frame. Now we'll take this inducement leg here. So in the 4H time frame, you can now see that price is totally bullish, massive one, the upside. When price was moving to an upside, when it takes this particular low, it breaks this structure. And this was the first structure that it breaks before taking this inducement leg here. We have an inducement leg before price breaking here, which confirmed here to be our low. So price takes this inducement leg. So when price take this inducement, it breaks structure to an upside. So if you see break BOS, that means break of structure. So price break structure to an upside, and then later confirm this low. All right. So when price confirm this low, in this movement, price didn't take any inducement whilst moving. We have our inside candle here. Price still push Price didn't take any inducement before it creates this what? This high. Since price creates this high, it gives us a pullback and then break the structure. So currently, this particular low here is our inducement leg. Here will have been our inducement leg, but here, this particular place is an inside candle, so hence it's not our valid inducement leg. So it is being transferred to this particular leg. So there is our inducement leg. So since there is our inducement leg, here is not confirmed as our low. So we can mark here to be a valid low, because in future price may come use here to be an SMT and then move down to respect our unmitigated extreme order block before pushing to an upside. So now, when price keep moving, still price didn't take any inducement leg here till it forms this high. When price forms this high, now this particular leg is our inducement leg. The one inside here is our inducement leg. So since here is our inducement leg, price move down to take this inducement leg and respect this particular area. There is our order flow. It tap into this order flow before moving to an upside. So when price tap into the order flow before moving to an upside, our next anticipation is that price needs to take this particular high. So if price takes this particular high, now if price breaks, we'll now be looking here to be our current inducement. But yet now, this particular place is not a valid inducement yet, because price didn't take this particular high. So if price takes the high, then because of this or this inside pullbacks, then our inducement legs will be confirmed. Either if price move like this, then here will be our current inducement leg, because price will be taking this particular high. And then the next move in this time frame, we'll be looking forward to see price to take here and then respect our unmitigated order block before pushing to a downside, and then we take the buy move at this particular point. But if price keep moving down, then we'll be looking forward for price to take here, which is our inducement leg, and tap into this unmitigated order block before pushing to an upside. These are the possible moves that we can see here in 4H time frame on gold. So price can also give us this move too as well. So if price give us a move like this, here will be our inducement, and then we'll be targeting this unmitigated order block before pushing to an upside. So these are the moves that we'll be expecting in the 4H time frame on gold. So now let's check in the 15-minute time frame to see how price will act in the 15 minutes time frame. So now there is our 15-minute time frame. You know, as I said earlier, price is fractal. So our structures in the higher time frame cannot be the same as the structures in the lower time frame. So in the 15-minute time frame, you can see price is totally bullish to as well. And price recently forms a retail traders reversal pattern, which is a double top pattern or an M formation pattern in the lower time frame. That's the 15 minutes time frame. So in this time frame, you can see this particular place. Here is our high, our mensal high, and we have our main low here too as well, before we get our inside structures. So when price also takes this consolidation move and start to move higher, price forms this double top, which is a liquidity, and this particular double top is also a reversal pattern to retail traders. Most retail traders, all of us are retail traders, but traders that trades based on double tops and double bottoms, support and resistance. So looking at this structure now clearly in the 15-minute time frame, you can see there is our low. We have our low here. Then we have this particular low will now be our confirmed low. This was a high, so we just take off this and then start our low here. So here's our low, and then when price is moving to an upside, before you can have your main lows and highs to map, price needs to take liquid, it needs to take an inducement and also break structures, which will make you to identify your valid highs and lows. So when price was moving to an upside, this was our first pullback before pushing to an upside and give us this second pullback. Price shoot to an upside without taking any inducement yet. So when price didn't take any inducement here, this particular place, price didn't take any inducement. So, and then it forms this particular high. When it forms this high, this push takes this inducement. We have an inducement inside here. We have our inducement inside this particular place, which price has taken that inducement leg. So when price takes the inducement here, it now confirms here to be our valid high. So here is our high. So when this confirms our high, price continue to take the move, and the structure was broken here. So if structures breaks here, now this will be our low. There are traders that will be mapping here as a low, low, but there is our low. So now you map here to be our low here, our main low, because price has taken this high. All right. So price has taken this high. When price takes that high and continue pushing to an upside, where is our inducement leg that is formed inside here? When price start pushing here, this was our first inducement, which price didn't take. We have our next one here, which price didn't take. And then have this inside inducement leg. So this particular move takes this inducement leg and later mitigate our unmitigated order block. When price takes the inducement, it mitigates our unmitigated order block before pushing to an upside. So when price pushed to an upside, then here will now be our next break of structure, and here will now confirm as our low again. So we have low here. So since we have this particular low, then our break of structure will come here. Have our new break of structure here. All right. So with this, you can see price keep on pushing to an upside and create this inducement leg. Later breaks here, create a new inducement, push to an upside, create this new inducement before this high. So this inducement leg was taken and keep pushing to a downside and mitigate our recent unmitigated order block here before pushing and tap into this particular level that forms our double top here. So that forms a double top. So when price mitigates here, this is our unmitigated order block. And then we have our extreme unmitigated order block to here as well. When price tap here, remember price didn't hold. If price was to hold longer, then it should take this particular high to give us a break of what? A break of structure. Our price didn't hold it longer. So we still have our unmitigated order block here. So in this time frame, in the 15-minute time frame, our unmitigated or our extreme unmitigated order block, which is this order block here, we should be expecting price to act on this unmitigated order block, tap in the unmitigated order block before pushing higher. Or price has given us an internal structure here, so which has taken sweep liquidity above here, giving us an institutional funding candle, and break this structure, give us an inducement leg. Our first point of interest is here. That is unmitigated wick. And then all these points of interest already mitigated. So hence, price can move up, tap into the unmitigated order block before coming down, and then respect this particular low. Then you can see the up movement. That's in 15-minute time frame. But if price breaks this low, that means that in the 15-minute time frame, we are having change of what character? Chalk. Chalk is forming. So if chalk form, we wait for price to give us an inducement, tap into unmitigated block before we sell. Because in this case, price will give us a chalk. So in the 15-minute time frame, that is how we'll be looking on what? On gold. This is the possibilities on what? On gold. So now let's move to our next pair, which will be EURUSD. is it Euro? No, sorry. It's pound USD before Euro USD. So pound USD. In the pound USD, let's check in the high time frame. So pound USD, looking at the chart in the high time frame, price was in a massive bullish. So since price in a massive bullish, sorry, I said bearish rather, sorry. And then the recent structure is bullish. So now, how can we now identify to see whether this recent structure bullish will hold for a time or it will soon reverse? So first of all, price give us this particular high in the bearish move. We have this high, and then our low here. First, price takes here, right? That's confirmed this high, and then we have this low. We have this high too. We have this low, which is our inside ones. Our left here behind. All right. So when price moved, we have this particular low too as well. Then we have this high. As I said, we're marking our lows and highs in here. It needs to take an inducement and also break structures. That can confirm your lows and highs. So when price give this move, now price form this massive low here, and this low is confirmed when price finally breaks here. Because when price was moving to the downside in here, okay, this was our inducement. Yes, price have taken here. So that means that this low is confirmed. And then we have this particular place too as well. Also inducement. We didn't have any inducement again. So when price takes here first, that will be our inducement. And then we'll be looking for an extreme unmitigated blocks to take the sell move, since price also was in a downtrend. So when price takes this inducement, this unmitigated blocks acts like an SMT, that's smart money trap. There is a reason behind it. And this particular order block, we have this place that we could take our sell in here, but price didn't hold it to use it as well as a buy side liquidity, and finally breaks our main high. When price breaks this main high, it closes. Now price didn't close above it yet. Let's see either price has closing above it. Look at the structure, look at the candlesticks very, very well. So let's see. So when price break comes here, it has a weak rejection. So you have a weak rejection here. So that means that this particular weak high was transferred to this one. All right. So now we have our new, now this high will now be our high. All right. So this will now be our high. All right, price has closed above it. All right, yeah. Price has closed above it. So it's confirmed as a break of structure. All right. Okay. So price has what has closed above it. Assuming price didn't close above it, and then this particular, if price didn't close above it, and then this one closed inside, you can see these ones two didn't close above it. So all will have just been a rejection. All right. A weak rejection. So which we'll be anticipating for a sell. So looking at the movement, when price breaks here and confirms here to give us a chalk here for us to take a buy, what happened? Price move inside, sharp inside or inside that range, and then take this inducement leg here. We have an inducement leg here, all right, and respect this particular unmitigated wick here before pushing, forms an equal high, and price push down to take this low. So looking at it, our current structure here is what? Is in consolidating. It's consolidating. It's consolidating. So if price breaks this consolidating structure, then we should be looking forward for price to take there, price to take this particular level and tap into this particular zone. If only price breaks the consolidation structure to an upside. So price needs to use here as our inducement, and then finally come and tap into our unmitigated block before pushing higher. But if price breaks to the downside, if price breaks to the downside, then we still have a probability of taking a move. But if price gives us a structure like this to the downside, but if price moves straight forward to the downside, you can still find any unmitigated order block and then take our short-term buys to the consolidation high, which is this particular place. This is our consolidation high. If price gives us a sharp move down, you can find our unmitigated blocks down here, and then we can get our short-term buys. But this short-term buy will be a very risky buy. All right. So if price breaks and give us a structure, that means that this, and give us a structure downside, that means that this particular chalk is going to be a fake chalk. It will not hold. Then we get our structure, get our inducement, price break, sweep this liquidity, and then come and take the inducement, tap into an extreme, and then we move to the downside. So that is if price breaks to the downside like this in the daily time frame. So now in the 4H time frame, price, that is the current movement of price. So in the 4H time frame, we have this high. We have this high here. We have this particular high. And then we have this low. And then we have this particular high. Then we have this low here. So looking at this structure, price was in a down move. Moving down before giving us this consolidating channel here. And finally, price has taken the consolidation channel low liquidity here and breaks through an upside. Take off this inducement because we have a minor structures too inside. So take off this inducement and later break this our main high. So when price breaks this our main high, it's respected a 4H unmitigated high. For each unmitigated high, this unmitigated is an unmitigated wick, which is here. This is where it is. All right. So price respects this unmitigated wick before shooting or giving us this reaction. So now, when price giving us reaction, when it tap into this particular supply, what will be our next move in the 4-each time frame? So now, let's look at the structure that is happening in this move before we can now see either we'll get our change of character here to the downside or we'll just take any inducement and move. So now let's look at our structure. So first of all, there is our unmitigated wick supply level that price has respected. So now in this structure, when price was moving to an upside, price didn't form any inducement before here. Before price formed this inducement, then have this high. All right. So price finally take that inducement and then shoot to an upside. So hence, we have our high here, then have our low here. So when we have our low and high here, price keep on moving to an upside that breaks this structure, and this break confirms this low. All right. So when this break confirms this low, it gives us our pullback here. That is our first pullback. All right. And then here, this was just a little consolidating before we have this pullback. When this high is formed, it gives us this pullback before this break. So hence this, but before this one to breaks, we have price has swept here with the candle wick here, create this particular low before shooting to tap into the supply. So this acts as an inducement. When price tap into the supply, it tried to respect this unmitigated wick and give a little bit reaction. So now, since price use here, our this particular low here doesn't take any inducement. All right. So since this low didn't take any inducement, this high cannot be a confirmed high, but this low creates an inducement and break structure. So we have this low, and then we have this high, which has taken this inducement. So there is the move in the 4H time frame. So if price breaks to the downside, if price breaks to the downside and take this low close above it, then we should be looking for price to create an inducement, sweep that inducement, tap into this unmitigated block, and then you can sell. So here we're now at as 4-8 choke. But if price give us an institutional funding candle here, that means that there is a high probability that price will continue the up move. And if price in the process of moving, if price didn't create any inducement leg, then we should be expecting price to tap into this unmitigated place or come to an extreme and then it reverses to the upside. But if price give us that inducement, then we should wait for price to take that inducement, we tap into this place, and then we can sell. So that is 4H time frame on pound. So in the 15-minute time frame, looking at the 15-minute structure, that's why price is fractal. From the high time frame to here, you can see price is giving us a different structures. That is why you need to know how the fractal nature of price works. All right. So you can find your way out in any time frame structure. So here we have our low. We have our low here. And then price shoots the upside. This is an inside candle. Okay, we have inducement line down here. So you have this as our high. You have a low. Price tap into a 4H supply here. And then sweep liquidity up here. Price has taken this low. That confirms taking an inside inducement here, a candlestick inducement, and then give us this low. All right, so let me map it with so we have this, that, all right, then we have this, and then this point before you have this one as well. All right, so in the 15-minute time frame, you can see when price tap into our 4-8 supply, price has taken liquidity here and finally break this structure. And finally break this structure. So we are now focusing on a bearish movement in the 15 minutes time frame. That is this particular area. So when price breaks here, we have our first inducement, or say when price break, we have our first inducement here. Before we have our candlestick inducement, we have another inducement here, which is inside here, which price has already taken the inducement leg there. So if price takes that inducement, now we should be looking to get our unmitigated block here to take a buy. But this particular, if price takes an inducement, our first point of interest, note this, the first point of interest is a 50-50 move. And sometimes it always acts as a smart money trap. So take note. So if price takes a first inducement, our high probability point of interest will be the extreme. So when price takes that inducement inside here, because we have our valid pullback here before this low. So this was the inducement that's lying down here. I know most of the inducement are very technical. You guys, most of you guys will not understand, but you get this thing clearly. It is part of our 2.0 course, which is currently on registration. We'll start holding it on April. We'll start on April. So all this, and then how you can use it in your entrance, different types of entrance, different models of entrance, is all part of our 2.0 course. Our 2.0 course is an advanced course of our 1.0 course, which we have previously. So now we have our advanced course, which is the 2.0. So everything is advanced, and then more entrance will be introduced in the 2.0. So most of the things are what are in the 2.0 course. So when we have this inducement, this particular block here is our current point of interest, which price has already tapped into it. As I said, this first one is our 50-50. That is our 50-50. So price can't continue to the downside from there. Or price use that place as our SMT, at the smart money trap, moved and tapped into this particular order block from here before pushing to the downside. As you can see in the 15-minute time frame, our current structure is what is bearish. So there is the move in the 15-minute time frame. So in the 15-minute time frame, our first 50-50 move is here, and then our extreme movement is what is this place before we drop price to the downside. So there is pound USD. So now let's check on Euro USD. In EURUSD, looking at the daily time frame, this is our daily time frame structure. The structure of, if you watch this clearly, the structure of the EURUSD is similar to the pound USD, just because they have positive correlation, but it is not 100% correlation. All right. EURUSD and pound USD is not 100% correlated. It's not 100% what 100% correlated. So you shouldn't be expecting it to be moving in the same direction at the same time. All right. So looking at the EURUSD, in EURUSD daily time frame, price is what? It's in a bullish move before it's bearish, price in a bearish move, massive bearish move, before giving us an internal break of what? An internal change of character. All right. So an internal change of character, if price gives us an internal change of character, it doesn't mean that all the structure will be in that same movement or a bullish movement for a long time, because we still have our external structures which price needs to respect, and the external structure is the structures that controls the internal structure. All right. So if you are having an internal change of characters, we just use it for a short-term buy and sell. All right. Before we'll be looking to see the price to respect our external structures. Very important. So looking at this structure, first, let's mark our main high and low here, which will act as our external. So this was our high, then we have this as our low. All right. So now let's look inside the internal to see the direction of price. So in this case, you can see we have this cannot be our main high. Here is our internal main high. We have this particular high here, which has broken structure. And when price is moving into the downside here, this particular move is very interesting. Yeah, because many traders got this wrongly. So when price is moving to a downside, all right, price didn't take any inducement here. So hence, this low cannot be our confirmed low. This structure forms here is not an inducement, it's just a single leg. All right, this is just a single leg. So this is a single leg. So price move a single leg, give us this corrective before giving us this impulsive move. All right. So this is a single leg. So you can't map this place as your inducement or here as an inducement. An inducement needs to be in the left side, not the right move here. All right. So here is not our main low. It didn't take any, sorry, this low is not our main low because price didn't take any inducement yet here. All right. So we have Okay, so we have this low, because this low was taking this in this high, and then this one breaks this structure. So our main high is here. This particular low is not a confirmed low because we didn't this video is recorded, so don't request for any record. All right, so this particular place, so I have a high here, and then our low is here. Why this low is confirmed? Because we have our inducement which is taken at this point, this particular place here. All right, so hence this high is confirmed, and then this low too is also confirmed. So there is the real structure mapping. This is just a tip. If you want to learn more, sign up for our 2.0 course. It is a mind-blowing. So this is our high, and then we have our impulsive move to the downside. Since we have this impulsive, look at this structure wall. So when price is moving to a downside, it didn't take any inducement. So this was our single leg pullback. So here we'll first ask as our inducement. But when price breaks this to the downside, still price didn't create any inducement here. Price didn't take this particular place is our inside bars. So price didn't take any inducement leg here up to this low. So this move is the same thing as the move that we have here. All right, the up here is the same move. So price just give us this move and then continue to an upside, so to the downside. So here cannot be your main low, high rather. So price breaks here. So this is not our low, and then our finally low will come here, this particular place. This is our low. So now we have our internal structures here. All right, we have our internal structure, and then note we have in another place here this particular low taking this inducement, and then this high sweep here because this was the main low here, sweep here, and then finally breaks. So hence we consider this place and then here. All right, so our internal, where the structure was changed, is here, which is our internal change of character. So there is our internal change of character here. Price has changed to an upside. So now we now look inside this up move to now find our future movement in price, because there is our current. This one has already happened. We only use here to get a little bit information concerning how this one will move in future. So when price pushed on upside, we have our first pullback here, but price didn't take it, which acts as our inducement. Price still move upside. Our price didn't create any inducement. Finally, it creates here, but here too is still protected. And then continue to an upside. Price didn't take any inducement here. Here, price didn't take any inducements here. So in this move, you can see price didn't take any inducement yet until price give us this particular move here. and then it was taken by this move. All right, so this was our last inducement here, this particular place, before price take that inducement and respect this unmitigated block before pushing to an upside. So in the daily time frame, so if when price takes here and tap into this, as I said, this is our 50-50 move. Anytime price takes a first inducement, price reacts to the upside. So if price take off the daily time frame high here, we should be looking price to either give us any inducement and later come takes that inducement, tap into this, and then continue higher. All right, and then continue higher. But if price breaks here, then we have our inducement here, and then this low was broken, and then we have this particular low here. So if price takes this low in the daily time frame, then that means that we should be expecting a bearish movement up to the extreme low. All right, so in the daily time frame, that is how we'll be looking at it. First of all, this place is already mitigated, so there's a high probability that price will still move upward and breaks this particular high. That is in the daily time frame. So in the 4H time frame, let's see in the 4H time frame how price is moving in the 4H time frame. So in the 4H time frame, we have our different structure formed here in the 4H time frame because price is fractal. We have this low, we have our high here. This place, price respect this place before giving us this move to the upside. So this was the movement. But let's focus on the current and how structure change the movement in this time frame. So looking at this, we have price give us this particular high. We have this high, this low has taken it. So is this low that makes this high to be taken? So is this low that makes this high to be swept? And this is our institutional final candle or a fail to close candle. So price swept here, sweep this particular high, and finally move and break this structure. All right. So the sweep is done because of this particular low. Now the structure is break because of this particular high. All right. So hence this low is confirmed, and here too is confirmed. So now we have price shooting to the downside. When price was shooting to the downside, we have our inducement here. When price was moving to the downside, first pullback was here, which acts as an inducement, but price didn't take. When price was moving to the downside, before creating this particular low, right, we have our pullback here, which is inside our valid pullback here, inside here, so which is acts as an inducement. So this pullback as an inducement. So price has taken the inducement and tapped into this unmitigated wick here before pushing to the to the downside. So this particular low will be our low here, right? And then here we'll take as our high because it has broken structure. And we have this low, but this high is not a main high. Why? Because price didn't break structure there. So that particular high here is not. And this is when price tries to what? Or price tries to change a direction of a direction. So when price finally breaks this particular high, this move was our move because price didn't break this low. It just respected here. So hence, since price respects here, let me show you something. So since price respects here, giving us an equal low, then this low power is transferred to this particular low. So hence this low power is now here. So we'll take this our low here to here. All right. So this low will now be shifted to this particular low because it's here that holds the power now. All right. This high will be here. All right. Now have this thing here. All right. So this is where the change of character happens. So price gives us a change of character. When price gives a change of character, we have price shooting to an upside without giving us any inducement. And finally, this was the inducement price gave before this high. So price give us this inducement and finally give us this massive move and tap into our extreme high low here before shooting to an upside. So hence this low here will be our low, which is also an equal low here. Break structure. This structure too is this place is confirmed before it starts taking an inducement. All right. So price keep moving to an upside. So when price keep moving to an upside, this is how we'll be anticipating on EURUSD, because when price is moving, we need to find our inducement legs in here. We need to find our unmitigated blocks in here before we can take our continue their buy moves. So when price was moving, this was our first pullback. All right, this is our second pullback, third pullback, right, our fourth pullback, all right, and then our fifth pullback. So now this fifth pullback here acts as an inducement. Here is the level that acts as an inducement, and when price give us this level, our next point of interest is this particular block. So that's why you see price has given us a huge rejection or action in here before market close. So and this is our 50-50 point of interest node. There is a 50-50 point of interest. So price can still respect here, right? Move back, tap into our extreme, which is here, and then take to an upside, this particular place as an SMT. No. So SMT, that is smart money trap. If you take here to be your entrance, you'll be trapped, and price will come and respect our extreme block, unmitigated, and then continue to an upside. So, but if price respect this place, as I said, this is a 50-50. This is our inducement. Let me enable the inducement word. Okay. So there is our inducement here. So price takes the inducement, respect our 50-50 point of interest, which is this particular place, and give a reaction. Price can give us this reaction, all right, and stop 10. Take here to be our smart money trap, and then tap into our extreme before giving us this move. All right. So if price give us this move, we should be taking our profit here if you are buying at this point. So price, there is the reaction of price. But if price moved up, all right, and break this place, that means that the 50-50 point of interest hold, all right, and give us this move. In the process of moving, if price creates an inducement, we get our inducement, and then we find our unmitigated blocks before we can push to an upside. So these are the possibility moves in the 4H time frame. So now let's move to the 15-minute time frame. Guys, after this, maybe the rest of the pairs we'll look at it later because we have spent much time. All right, so in the 15-minute time frame, look at the structure that price is giving us. Yeah. All right. So in the 15-minute time frame, price is massively bullish, and later giving us a change of character. And this change of character in the 15-minute time frame can react as a pullback in the higher time frame. So here is where the structure changes. So this can act as a pullback in the higher time frame, which will be anticipating price move and respect our higher time frame, our point of interest before we can buy. So let's focus on the current structure here. So looking at this current structure in the 15-minute time frame, before price change to this or to this bearish movement, we have price sweep this liquidity. All right, and price sweep this liquidity. We didn't have, this was unequal, so our change of character happens at this point. All right, happens at this point. So before this break, in the 15 minutes, so we have our chop here. Okay, we have our chalk here in the 15 minutes. So if you have a chalk, then we should be looking for what? For a sell, but not a buy. And if you are looking for a sell in the lower time frame, make sure that you check in the high time frame, because in the high time frame we have a particular levels that price needs to hold before we can buy. And looking at the direction of price is bullish in the it's in the bullish. The current movement is bullish, so we need to trade in the direction of the high time frame. So if you're having your short-term sales, you should have it in mind that price will respect the high time frame point of interest, and when price is approaching, then you should be out of the market and then be anticipating to take the next move. So when price push to the downside, right, this was our lowest point. So since this is our lowest point, we have our pullback here, which will act as an inducement, but there is our lowest point. And in this lowest point, we can find an inducement here. So all these candles that you are seeing here, sorry, this one is not part, is this particular place. This particular candles before our lowest point is an inside bars. So there is our inducement. So many traders will be looking here to sell, to take the sell, before they say they have found an imbalance and then they found an order block, so they'll be looking to what? To sell. But in this case, they will be selling at an inducement point. That's why it is called an inducement. An inducement level is just to induce traders to enter a trade, and price will finally take them off and then move into their direction. So there is our inducement, and then our next point of interest is this particular high to take the sell in the 15 minutes. So should be anticipating price to take this inducement, use as liquidity, all right, and then tap into this level before we can sell. And if you are selling, we should know that, as I said earlier, price will be tapping into a high time frame extreme point of interest before we can buy. So you don't need to hold your sell positions for a longer time, all right, in the lower time frame. That is swinging in the lower time frame, all right. If you don't know your high time frame structure, you don't need to swing in the lower time frame. Make sure you get your high time frame structure before you can swing, all right. So guys, there is the possibility to move in this time frame too as well, all right. So we get our move to the downside after inducement is what is taken, all right. So guys, thank you very much. This will be the end of this. The rest of the pairs will continue it later. If possible, we'll continue it later. So thank you for watching, for participating.